your opinion in terms of what we had in June, which was, again, a very specific set of circumstances. But do you think lightning can strike twice in that?
Absolutely. I think so. I'm going to be a little bit of a cynic here and just probably
Sure.
say what a lot of people think. A lot of apes sold. It's just happened. When we
Of
did
course it
a
did.
100% drop from 30 to 13, it just happened.
Yeah.
But hey, don't be so down about that, right? Like let's be realistic and probably accept that most of the non Twitter ape community probably lost their convictions somewhere along this 100% drop.
It was a
Um,
lot. It was a lot.
yeah, it was just too much to deal with. Like even I stopped looking at my AMC shares, which are in my Roth. I was like, it's just not worth
Yeah.
the headache, right? It's just like I was like, well, I
Just
know
leave
that
it
I'm not gonna
alone.
sell it
Just leave
for
it alone for
less.
now.
Like let's say
Yeah.
worst case scenario, I lose conviction in this thing squeezing higher. I would never sell AMC for less than $20 just because I'm very certain that it's worth more than
Yeah.
$20, right? And that's without any short thesis.
On a fundamental level, I think at least in the 30s.
It,
At least. At
and that's
least.
kind of right, and that kind of makes sense. Trading the same level as it was before COVID, right? But we also sold shares, which is bad, right? But we at the same time ended up alleviating some of our debt in the face of the
Yes.
pandemic. So it makes a lot of sense to me, right? To think like anywhere below the 25 to 30 mark, I don't even think it's fair value. So for me, I just stopped
No.
kind of looking at it. But 2 days ago, you messaged me and you were like, hey, I think it's time. What do you think? And I was looking at AMC and I was like, damn, every time John says something, it works out. I should really look into this, right? And
It just like my spidey sense was tingling, and it wasn't until just this past week I'm just like, huh. It's kind of like I was just looking at the chart and looking at what it's been doing, yeah, and looking at like what it was doing, and the fact that we're number one hitting this previously resistance now support, and the fact that we're holding it, and that we've had this little nice sustained, like look at this green move here. This, yes, but this more so the past 2 days. That looks really nice, and I'm trying to see, because there's these moves where it just like shoots up like this or shoots up like that. Thank you, Richard Petty, for subscribing. That's very sweet. I see, it's AMC is usually a lot choppier. The last time I saw something close to this was probably in August, or in October, right before it had that little move up there. But even still, this looks a little better. This looks healthy. This looks like a nice, healthy, like kind of baselining right here. And I think it made a reverse head and shoulders kind of there, like there's the shoulder, head, shoulder, and there kind of went up but then failed. And now it made like this nice double bottom. And I'm encouraged the fact that it made just a firm, flat double bottom. The right side wasn't lower than the left, which obviously means it's going to fail downward. And that just looks beautiful. That 29% move just looks absolutely beautiful. And the other thing I was looking at was, so right down here during this very unfortunate move down from 27 down to a low of 1341, you can see the volume increasing with price decreasing, which is bearish. Right here, this little move back down, a little bit of a volume decline. Not enough to be probative, but the fact that there's been 2 days where volume has increased like this, and it did that a little bit there, but this looks a little healthier. That looked like somebody covering real fast and then it dropping off. This looked like a little bit more healthier, like people are trying to establish a position again. Well, thank you, Chris Harley, for subscribing. Do I want the running zombie as the subscription button? Maybe I should change that. So what do you think about all that?
Honestly, I'm having such a difficult time on things that are not even related to this. I'm still struggling with my stream. I don't know if I'm live. My Streamlabs is telling me that there's people in my chat. But
good.
On YouTube...
I have viewers. Nobody has said anything yet, as far as I can tell. But I do believe I have viewers. It says I have viewers, so thank you for joining, guys. I appreciate it for my first stream. That's very sweet. And JP, I'm glad you're here, because I feel like this feels like we're in a bit of a reset situation with AMC.
It feels great.
It does feel great. It feels really, really good. And so like this. Let me turn off some of this radius.
What's the link to your stream? Because when you're talking about charts, I'm not adequate enough to like pull up your stream.
Because I did share my screen with you.
Okay, I could pull that whole. You're right.
Yeah.
Oh.
But I don't know if that would change you. Oh, hold on. My cat's here. Hello. Hi, little kitty. This is Arteo. Hello. Hi, kitty. Sorry, we're talking the global financial meltdown.
I got it. I got it. I'll just make this like most of my screen.
Okay.
It's not it.
It's fine. Do you want me to check your stream?
It looks like it should be.
Did you post it to Twitter?
No, I didn't. I don't have my thing linked. Bookmark.
Oh, okay.
I always talk about.
Are you streaming to YouTube?
Yeah, but I haven't figured out if it's on or off yet. It's saying it's off still on my YouTube.
Okay, well.
But there's definitely people.
I will check. Meanwhile, while I'm checking that out, you talk a little bit about what your expectations are for what's going on with AMC.
Oh, I'm live. I got 19 people. We got 20.
Hey, there we go. Awesome.
Awesome.
Yes, I see that you're live now. Yes.
All right.
Am I on? Yes, I'm on with the screen and everything.
Yes. What's your? Let me pull up your Twitter.
Yours looks frozen. Like the Discord looks frozen, but the background is working. So your Discord images here are frozen, but your background is working. So I don't know what to say about that other than you are live, but your Discord images are just frozen in place. So I don't know. But I will like your stream. I know mine is working. So.
It makes a lot more sense on why that chart wasn't. All right, I think we're going now.
Let me make sure mine is. Yeah, mine's working just dandy. So that's great.
I got your tiny chart that no one will really be able to see, but they'll be able to see the big picture, right? Like they won't see the numbers.
Right. So what do you want to say in terms of? Hold on. Let me get rid of my.
Let me give this a go here, because I want to pick your brain, and I'm still a little discombobulated about setting everything up. So let's just put the pressure back on you real quick, John. This podcast, Between Two Fibs, is going to be me interviewing some of my favorite Twitter traders and people.
What can I say? My cat likes AMC talk.
Yeah.
He wants more food, but he's already eaten, so... So anyway, so what are your? Do you also feel kind of like the same sort of spidey sense I'm feeling, right? That something's going on here. That this is a little bit of a reversal of fortunes.
Oh, absolutely. It's the tides are shifting, right? Back to if you weren't in the first part of the call, one of the contingencies. So I stopped trading AMC back in December. I think I took like a BAM call or something. Just because, hey, like sometimes BAM hits. Don't get me wrong.
Sometimes.
Like,
we're gonna talk about BAM.
Okay, I guess your opinion's made, but we're all trying our best. So I did take that, and it did not hit. There were no elephants. They did not show up. And that was back in December here. And then I never touched my chart. I was like, hey, I just haven't touched it. And we were trading in between these two ranges. And a couple days ago, there was a shift. We started seeing major bearish volume come in, followed by no more volume, right? So downtrends usually, to continue a trend, you need like progressively more volume to keep that depth. But it all dried up, and then we started seeing a shift, right? Low volume days, it's bottoming out, and then we see these past couple days where I think are up 27% or something.
Well, it depends on where you started from, but based on opening, I think 27%, yes.
Yeah, it was. I think I saw 12 yesterday and 15 today, which is huge, and they're holding through the afternoon. So that's definitely a big change. So then it kind of comes into how I would plan around trading around this. Because I was waiting for the afternoon strength, I didn't trade yesterday AMC at all. Some of my Discord members were trading it, and they were netting like 200% returns on like many calls. And I was just like, hot damn, like it is running. This is dope. And
it worked out super well.
And it was sustained. Yeah,
it was sustained. I got in, like I said, I got in just a handful of those June $20 calls, which were not cheap. And I was just taking I just felt I had like I got in when it was around here. It was about 15.20, I think, yesterday. And I just bought 6 of those calls, and I'm up 55% on them. Because they weren't cheap, that's like $1,000. But I'm just going to hold on to them because, like, first of all, I have so much time utility on those out to June. They're fine. And I have a friend of mine who's been charting this for a while, and he's actually been very good on the bearish calls for it. That he's saying, he says it really, the next, what's going to happen over the next couple of days is going to be probative as to whether we break this downtrend that's been going on with it. And it looks like we're stabbing into it. Like we're getting close to actually like
we actually closed over our last major resistance, which is huge, right?
Did.
Our last major resistance was the 1871 mark.
Yes. And it looked a little healthier because if you look at like this looked that was very sort of sharp and very jagged kind of a move, a clear like double top thing, and it was just like a sharp upward move in the pre-market. Yeah, that was pre-market. That then sold off, tried again, and then failed. This was just a nice all day long, 2-day long sustained moves upward with only a little bit of a breather in the middle. That's fantastic.
It actually didn't even have a real correction. It was just 2 flats, right? Like there was so much buying pressure that we weren't able to see a 3-waved correction at any single point on this.
No, you're right.
So this is all still a single wave, right?
And you look at the volume here. This is just the 10-minute volume, but like there was definitely some green there, but the red sell-off was a little more intensive. This is mostly just buying volume. At the end of the day, right here, look at that volume right at the end of the day to try and push it up there. Like I have a feeling that Dave Marino's composite man is shifting positions on what's going on with this.
I've never watched his videos. I got to.
You should. He's fantastic, and he brought Wyckoff to the masses, and I like Wyckoff. I think it's hard because with Wyckoff, like a lot of TA in general, it's easy to look in the past and assign like, oh, this is clearly this and that, but it's a lot harder to assign it in the present, like what it actually looks like until you pass the part where it is. But I think that Wyckoff it has shown itself to be both prescient and probative for a long time now and deep into the past. So I feel like what we're seeing right now, I mean, obviously, if we didn't have this crazy downturn in the market, this would have not looked like this. This would have looked a lot,
I don't think we would have left my first range, which I had from about 17 to 20 for the first real demand zone. I don't think we ever would have broken below that without the downturn. So. But then here comes like another pragmatic, or I guess maybe practical concern is retail is going to want to buy, the dip if we turn from bearish to bullish in the general market here. But the dip radar of things to buy generally isn't going to be meme stocks first. So I'm a little confused on why it probably has to do with the Ortex data, but I was a little confused to see, the whole market at such a prime discount and seeing such major volumes in these 2 tickers. But I think a lot of that has to do with Ortex, but that's actually extremely bullish, right? To see, because in my mind, it would come later. People would buy the dip in, Apple, Nvidia, Microsoft, and then, hey, let's throw some change in the meme stocks that if they aren't apes.
Yes. Well, I think that number one, the fact that Moody's upgraded their rating from negative to positive in AMC, which the last time they changed the rating was when the pandemic first started in April of 2020 to negative, obviously. So the fact that they upgraded it, and the fact that the change in fortunes in terms of their debt without adding, I was not necessarily of the opinion that we shouldn't have given him those shares back then, because he could have sold 20 million shares. Yes, it would have added to the dilution, but it would have wiped out all of AMC's debt, and they would have been able to, and then the short thesis would have been completely destroyed, right? But the fact is, we didn't do that. Go ahead. Sorry.
No, we're on the same boat, man. No one saw this play lasting this long, right? If we had the
Right.
same option way back then, like, hey, if we give them this many shares, we could hold for a year and be debt free, right? I think everyone,
Right.
would take that. But at the same time, right? I was always on board with that, just because the short thesis would have been crushed. But when you got to do what the people want to do, I don't know. I'm with you on that one. It was tough. I would have preferred
It
if
was
we
a tough
sold
situation.
more
I
shares.
understand. I understand the retail side. I understand the ape side. I get what was going on with that. But the fact is, we're here now, and I feel a couple of things. I feel that. So what do you think, now that we've broken through this little resistance thing? I don't know, it's hard to say that we're going to continue to move up after two days where we moved close to 30%.
Yeah, so I think that stems a lot into the CPI data for tomorrow. Like,
Right.
look, if the market sells off tomorrow, AMC will lose a lot of these gains.
Of
But
course.
the whole market will, right? But on the other hand, if it doesn't, it's just adding to the bullish thesis. And we know that bears are trying to short this. I mean, they look at how much money you've made if you've been bearish on AMC since
Oh, totally.
since just November. You're up 250%, right? Like, that's
Right.
absurd. So you know that it has this, just like how apes bought AMC and saw it run, and then they were like, holy shit, like, I'm gonna keep buying the dip, right? And they bought every single dip because that's their trading thesis, and it's a winning thesis. It's the same thing for the bears, so you know that there's sell pressure coming in. So I think
Yes.
tomorrow will actually be an explosive move again.
Think so?
Either back down probably to 16.5 or up to the 20 marks.
Yeah, that's what I'm kind of anticipating too. I will be, as much as it would be nice to see it just move up into the 20s. Again, I really would like just a little bit of a breather, just so I can buy out those options. And so let's talk option
Options.
strategy. Yeah, let's talk options. That's what we both trade. That's our primary motivation. I am buying shares, but I do love options. They made me a goodly amount of money last year with AMC and with others. So let's talk about it. Let's talk about, like, what are you, because you tend to trade more short term.
Yeah, we trade very different, and just for everyone tuning in, I haven't really had time to really talk about what I want this podcast to be, but I'm naming it Between Two Fibs because I really like the Fibonacci ratios, and I thought Zach Galifianakis, or however you say it.
Galifianakis. Yeah.
Right, those Greek last names, they'll get you. I
Well,
thought...
that's like the Americanized version of it. It's like Galifianakis. But it's that's because I'm Greek, even though Holowak is not Greek. I'm more Greek. That's the swarthy, I look like a Jew, but I'm not a Jew kind of look that I have. Anyway, so Between Two Fibs is a fun name. I like it.
Yeah, absolutely. I think it'll be pretty good, but I'm really excited about it because I'm going to be going around interviewing people who I've have a good relationship with on Twitter, who are traders, who have made money off of their trades. Basically, people who have a different trading style than me, but who I trust with their trading style with. And one of the first people that comes to mind is John. This man trades 100% 80 different, like, just totally differently than me, and he uses completely different TA, but his gains are stress-free. It's long-term options, and he's one of the best swing traders I've ever met. And I'd love, yeah, absolutely, dude. I'm not even kidding you. I can't tell you how many times on Twitter I'll get a DM from John being like, "Yo, you should check this out," and I'll be like, "Okay, I'm gonna wait for consolidation." And then, an hour later, I look at it and it's up 12%. I'm like, "What the fuck?" Like, not the option, the underlying, right? Like it's just these crazy things that impress me. But anyways, I did want to get into your strategy.
And in terms, and not to make this like a reach around, but I just want to say that again, we do trade very differently. I am extremely impressed that you have this dedication and focus on a daily basis to do these types of short, fast trades, which I do occasionally. But it's a very different trading style, and the fact that you're so good at it and so consistent at it and make a living off it is very impressive to me.
It's almost a fear thing, honestly. I'm afraid to leave money in options overnight So I found my trading window was the least stressful if I traded intraday and kept runners. That's kind of just the
then you've already made it profitable. If you make more money, great. If not, then oh well, it's fine.
exactly.
No, I totally get that.
But on the other side, as you start to increase your portfolio, you don't use all your cash every day. That'd be stupid.
Right.
So you start to think of other investments, and one of the ones that I'm thinking of piggybacking with John and is AMC leaps. I absolutely think that we're in for another run to at least the mid 40s. That's pretty
At
much
least there, yeah.
it's pretty much where you'll start to find institutional selling. And before institutional selling, if the institutions shift from short to long, right, the bears won't be in control. It will be bullish FOMO institution sell at that 40 to 50 range, right? And then if the bulls are strong enough to carry through this institutional sell pressure, it will absolutely be able to squeeze higher because the bears
100%.
will double down there. But anyways, I do think that a run to the 40s or mid 40s is easily expected for me in the next 6 months or so. And that's right around the time that you're looking to trade your options. So I'm not sure. That's the other thing I wanted to look at. So today it's a little frothy, right? There's 450,000 calls bought to the 181,000 puts, which is just a little bit more than the 2-to-1 ratio. And it's
a little bit.
Right, and it's a lot more than the ratio we have been seeing. So the average put to call ratio is 1 put to 2 calls. This is slightly over that, and the average ratio is much higher.
Yes.
Or the average ratio has been much higher because the market's been in a bear trend. It's been actually in favor of the puts. So it's quite the shift in momentum for the options chain, but that leads you to believe, right? Like, hey, where's the profit taking? Where do the market makers come in to start to drive the price down? Because that's where I want to start to buy. Hey, look, I feel like I missed yesterday's trade. I did. The people in my Discord all were just like posting tweets of 100%, 200%, 300% trades that they all took on AMC, and it's lovely. But I've just traded too many times and bought this and seen it sell off to jump in. So the next thing you do, right, is you start to plan the macro of the chart. So we're entering back into this major resistance area. We have a gap that comes up to the 20.5 range.
Yes.
So pretty much we're seeing like, hey, this is going to be our major resistance, this gap fill, and then once we start to gap fill, you start to think, hey, that's probably where I would sell if I was long for this whole wave. So that's where the sell pressure, the profit taking wave will come in. The bears will start to short, and then we'll start to get our options again as the IV gets crushed. But what we don't want to do is buy this trajectory. So if you put a trend line,
Did you share your screen? Let me see if I can put that up here.
No.
Well, just
you can do the same thing on yours. You know what I'm saying.
Just talk through it. I'll show what you're talking about. I know what you're talking about. So go ahead.
Exactly. So what this is the trend line, that the trajectory that the options are being priced on right now. So John bought a $20 call that's all the way out in June, right? And
6 $20 calls.
Right. Beautiful trade. And those are up 50% in value in 2 trading days. And they have many months left, which is a beautiful spot to be in. But that begs the question, why are they up so high in value? Well, that's because John bought them when the trend was flat, right? The stock's consolidating flat. The probability of that moving to 20 when the stock's on a flat trend is very low. But when the stock's trading vertical and it's rising 20% a session, the implied volatility goes way up, and the trajectory you're trading on is much steeper. So I don't want to look to enter into new calls, right, new swings, unless I'm adding to something or trimming to something, until we break this insanely vertical trend. And once we do that, that's when you'll start to see profit taking, because the call value on all of the out of the money calls, which are artificially inflated from the Vega and the trajectory, will plummet. It'll go down 30-40% in value. even though the underlying didn't make the same move. Now, as those go down, that's where you try to load back in. So, to kind of plan how I would trade, I do want to get into the same positions John's in. Not to steal his thunder, but he was mentioning the June's 20 to 40 series every $10. So 20, 30, 40. I think that's a great split for the potential to get some crazy returns on the 40s.
So here's the ones. So here's the ones that I got. The ones that I'm looking at. The ones are the June 20s, the July 40s, July 50s, excuse me, and the September 40s. Those are the ones that I'm most interested in buying out to. Although the June 44s have gotten more volume today, which intrigues me. They have the second highest volume today in June after the $20 ones. So I'm intrigued by that. It's very interesting that June is getting a lot of attention right now. Obviously, June was the time last year. I don't know if people are just expecting that same type of build-up and timing or whatnot, but I think like because last year, what was the highest? We had $40 was the highest option available last year, right?
I think it was something about around there before they.
Because I remember because when I was buying in April and May, 40 was the highest I could get in August and September, and that's what I bought out to. When I bought, so last year what I bought was I ended up getting 100 calls total, which is what I'm looking for this year. I got a bunch of I think July 20s and then August 20s and 30s, and I got some September 40s, September and August, late August 40s. So those are the ones that I got, and it was a $25,000 investment plus shares. So all told with shares, $25,000, and that turned into $500,000 in June when the whole craziness happened. So I don't know if lightning will strike quite that fervently this year, but I think there's a good chance of making at least a few $100,000 off of this.
Absolutely, and that's the beauty, man.
Not financial advice. Do not copy these moves just because you hear us talking about them. This is just for entertainment value. This is just for you to be like, okay, let me look at this and let me make my own trading decisions. It says it on the screen. Whatever you do and fuck up is your fault. Anyway, sorry, go ahead.
No, man, I'm right there with you. I don't know if my video's been frozen for a long time, so I'm gonna.
That's too bad. I'm sorry.
Yeah, well, it is what it is. Anyways,
we're gonna have to troubleshoot it next time.
They can hear us, and I linked your stream, so anyone who wants to jump over, please do, and take a look at what John's looking at. He's looking at the unusual whales data here. It
doesn't look frozen on mine. It's working. I can see the video's moving. Like it's good. I see your thing is moving and your screen is moving, so you're fine.
Oh man, I got screenshots. They got screenshots. They're making memes.
It's working on mine. So
John, we're gonna be memed. But yeah, I
Van Gogh shirt today for this occasion. I was glad it didn't end up in the green screen. It's because there's a little bit of green here. So those options that I was talking about. So the June 20s, the July 50s, and the September 40s. Those are the ones that I'm most intrigued by. I like the safety of the June 20s, and I figure by June we're at least going to be over 20. I see almost a 0% probability that we're not there by then. Yeah, I guess the whole stock could collapse and the market could fall apart. If the market falls apart, then there you go. But
that's kind of how I'm feeling, man. I think that the $20 to $30 is the very minimum of where this stock should be. Yes. And that's in like a decent market. Like and I think we're way better than a decent market. I think retail got real scared, bought a whole fuckload of puts, and the market makers delta hedged by shorting and unleashing longs. Yeah. We weren't ever gonna break down from rates raising. Come on. No. But anyways, I kind of feel the same.
Super fucking spooked. The whole market just took a big breather, which I think was honestly necessary, but I think maybe too much of a big heavy shit after all of that. But
exactly, and
I think CPI will look. I'm knock on wood. I hope it's gonna look a little better than we think. Tomorrow, I have a feeling that because the last CPI, what was it, 7? Was it 7 last time, or was it 6 something? I think it was 7. whatever it was not great. But then I think the Biden administration said like, but this month, for the next time, we're seeing it improve. So I have a feeling it's going to be better this time around.
Yeah, honestly, I was thinking the same, but if I'm not mistaken, Europe's was worse, which is, a little disconcerting because obviously there's going to be some overlap in supply chains stuff. But at the same time, right, like all this stuff is factored in.
Of that is it all related to Brexit?
I have no idea.
I know that's a singular. I mean, that's just a UK affected thing. But the fact that there's not as much free movement of goods in Europe because of that, I think that probably has definitely an effect.
Plus, Germany is probably going to leave too, right?
Is Germany going to leave? I didn't hear that.
I thought this is like a year ago since I've even thought about Brexit, but my understanding was Merkel didn't want anything to do with being in the EU if Great Britain left.
I don't remember that. I'm not. This is all just sort of like
either way. So yeah.
Live there. So yeah. So it's all just from memory. I'm just wondering, just off the top of my head. Let's move back. So those options I was talking about. What would you look at in terms of other potential plays in this for options, for long-term options?
Okay, so I'll just break down exactly how I will manage this trade. So I'm not in it right now for any options, and the reason for that is I didn't get in when John did on Tuesday. On Monday, John messaged me at night. He said, "Yo, I'm going to buy some AMC options," and I said, "I think that looks like a great idea. We should do a stream about it." And John bought the options.
The next morning. Yes,
and I did not. So you can see, one of us might be having some non-buyer's remorse here. But anyways, I
only regret I didn't buy more. I didn't have the money transferred in at the time, unfortunately.
So I have no idea how to fix this. Oh, maybe if I leave this out, it stops freezing. I don't know. Anyways, I keep freezing, but here's what I'll do. They can still see my screen. My mouse is working. So
yeah, the videos do keep freezing, I guess. It's frozen now. Maybe just take off the it's fine, whatever. They know we're two people talking.
We're two people talking. So yeah, so basically I'm going to do first thing first, just get my ranges. So take the impulse wave, and impulse is from the start of the move up, so I don't really want this junk where it's still going down. I want that 1504 or rather 1469 low from Tuesday to the high today of 19. And then and I'm going to do my fibs because we're retracing down. It wants to go from 0 to 100 top to bottom. So the 60 is lower than the 50, right? It's a deeper retrace. And I'm going to just mark off that 60 to the 50 range, which coincides exactly where I mentioned to John that I think we would consolidate if we pull back tomorrow. Right. Which, you can just kind of visualize these things by looking at like the midway mark of a big push. That's kind of like, hey, that's where, if this push is good, buyers will come back in. But yeah, because the put to call ratio is a little bit absurd today, and because we just rose 25% in 2 trading sessions, I know that I don't want to enter any long-term calls that aren't a scalp until the prices start to come back to normal and the IV drops. So the next thing I'm going to do is I'm going to go to the trade tab and then look at the options I want. So if I'm trading the June monthlies, then I can look at, hey, first off, I have all of my Greeks up here. You can change that. And then the second thing I have is how much did it change from the day before? If it's 60% up from the day before, like, it's probably not a great idea to full port it. You know what I mean? Why? Because waves come to an end, right? It might be the greatest wave ever, and you might have a blast riding it. But if you don't get off before it crashes, it fucking sucks to get thrown into a sandbar.
Yeah.
Right. So it's a little bit too high for me. So I'll take the ones I want, though. I'll take that $20 call, I'll copy it, and I'll put it into a watch list. And this watch list is all things I'm trading. And you can see a lot of them become, expired because I scalp such close dated. But the big ones that I'm trading or still have open, I keep up here so I can easily see them and then chart them. But I'm going to put this into a watch list, and that's just the $20 call. And then I'm going to go back to my charts tab, open up another section, and I'm going to pull it up. So now I'm looking at this option. John bought this option at $2.44 2 days ago, and today it's selling at $5. Right.
Yeah.
Right. That's
That was a good one. That was a good call.
Yeah, and it's not the first time this has happened either. Every time you say you're gonna buy something, I like, all right, I'm always a little bit slow to take things. I've been burned
Okay.
too many times, so I always kind of try to wait. And I'm telling you, I don't think I'm gonna wait the next time you say something, man. But here's
I just had a spidey sense. It's just like occasionally when I get like that, something's going on. This is the time to do something. Like it just, I don't know. It's just like one of those. Because there's that. There's a great book which is not exactly related to this called The Gift of Fear. Have you read it or heard about it?
no.
It's a very interesting book. It's all about human intuition and how there's. I remember one time I was driving in traffic, and I had this flash in my head of getting into a terrible car accident. Just like, and occasionally we do get this when we're driving, right? Just to vision this, but it was very strong, and just up ahead I had to slam on my brakes really, really hard because it was a single lane with between two like concrete. It was a construction zone, and it was between two like concrete barriers, and I had to slam on my brakes and pull just aside because the car ahead just rammed like at 40 miles an hour into the car in front of him. She wasn't paying attention, and I saw the car lift up and fall to the side and almost flip over because she hit the car so hard. Thankfully, nobody was hurt, as far as, I mean, not like badly.
So you're saying you are a wizard?
Well, I'm just saying that in the book, the guy who I think worked with like law enforcement or was law enforcement, he talks about how you have human intuition that's based off of some culmination of something in your head that comes together, and you don't know why it's telling you something, but you should always pay attention to your intuition when it's screaming at you, because that usually means that there's something that's going on subconsciously that you're just not aware of, but that it's probably telling you something that's true. So I did actually, like, I was paying attention to the road, but the fact that I had that flash in my head right before it happened probably made me a little more cautious and pulled my foot a little bit off of the gas. Otherwise, I would have definitely hit those cars. I was like maybe 3 feet from hitting those cars.
That's insane.
I know, but same thing here. Much like a car accident, AMC can go either direction. You can either get out of the car accident or you could get into it. And in this case, I got out of the car accident, and I think you will. I think, you know, smooth roads. I just, like, as you can see from the screen here that I have, it's just like these options are just so juiced today. Like, they're so crazy juiced.
So juiced.
The $25 March 18th calls went up 90%. Just crazy. Just crazy amounts of growth the past 2 days on these.
All right, so the next thing I want to show is I pull up the option chart, and I want to look at, like, hey, what the hell? Is there anything I could have noticed, like, ahead of time?
Right.
Well, the first thing is I always want my volatility index on. It's just a very simple indicator, relative volatility. It just says, hey, this is low volatility for where it normally is. And if you look at, like, how options trade, because they're priced on volatility, you'll find that, like, almost regardless of the price action, to an extent, obviously, you can pretty much enter into options just based on their volatility, right? But anyways, look at the volume at 10 a.m. on Tuesday coming in on this call. And then it's just straight shot. So it kept going down from the 2.6 where it entered. There was 4,000 contracts bought in a single 30-minute period. That's almost 3 times the much as the whole day, right?
Yeah.
And since then, it hasn't even stopped. No. And that's insane, right? But that's what John saw across the board on all of these calls being bought. 16% higher than the open interest is what I believe he said, meaning that the market makers will have to find those shares they're not hedged for. And it started to run, so more and more people kept FOMOing in and buying them.
Yes.
But essentially all I'm trying to get at is I will pull up this options chart and take a look at the range of prices that this has traded in the past 2 days and decide what I think is a fair price for this. Now, if we keep going vertical, that will change. But if we pull back and this doesn't pull back down, right, to the $3 mark, I probably won't enter it. It needs another day for IV to cool off. If we pull back down to you're not going to get the 2.4 again unless the whole bullish push is invalidated, which we don't want that big of a retrace.
No.
So
No.
what I'm looking for is to keep this on a watch list and realize that, hey, I could buy, 2 contracts for $1,000 today, or I could wait and try to get 3 contracts for $1,000 tomorrow if it pulls back to 3. And that's kind of how I look at these longer term trades. Is we're in the demand side of the market still, but we're on the supply side of the demand side. So worst case, right, you get into a long position here. I don't think John or I think if you buy a $4.75 option expiring in 6 months that you'll have a problem getting out with it green. But I think both of us would agree that you'd get out green at some point. But if you asked me if I think that if you'd be able to get it cheaper than 4.75 before then, I would say almost certainly. And that's kind of just how I view the Vega and the IV spike and how I'm conceptualizing trading around this. So the first thing is I went to AMC. I got my range of where I want to enter. I want to enter AMC calls down at the 1631 to the 1683 mark. I know it's a little tight of a range. Nothing's perfect. It won't be there. But that's a gist, right? And the second thing I want to do is I want to make sure that this call that's trading for $4.75 isn't trading for $4 still when we're back down to this range. Because when it started the day, it was $3, right? So started the day. Today at $3, we were trading in the dead center of the range I want us to pull back to if I'm going to enter, right? And tomorrow, if it's still trading at $4, then I'll know that the inflation or that the Vega and the IV are still too high, and I'll wait. And then, hey, look, because Theta's not kicking on this yet. Theta's like 0.001 pennies, right? It's not doing anything until 2 weeks out. So it's only Vega, really, and price action that you're worried about. So, like, your Delta Gamma and your Vega. Rho, maybe, but I don't even understand Rho. It's just like risk. It's like interest rate risks. Like,
does anyone truly fully understand options? Like, is that a thing that anybody really is that
right?
Old, like, yeah, I don't think so. I think there's always somebody who's like, this doesn't make sense, but I'm just gonna go with it anyway.
Right. It's like Elliott wave theory. You don't need to fully understand every little thing, but if you understand enough, this shit will help. Maybe like Wyckoff too. I don't track it, but Elliott wave theory is great. It's not going to be perfect, but it'll give you probabilities. We were talking about Dave earlier and his Wyckoff and the composite man shifting up, and it was just making me laugh because you're talking about how in hindsight it's so easy to label these things, and it's the same for Elliott wave. In hindsight, it's going to be super easy to label SPY or futures. But because it's a correction that's not just a normal, your regular day-old correction, it could be like 25 different formations from here. So my convictions are so low that, I'm not going to take massive trades on that. But anyways, I'm just going on a tangent now. Circle back.
So in terms of like longer out trades, like I gave a few of the ones. I know you probably haven't had a chance to like look thoroughly through them. But do you see any in terms of like something in June or even those September ones?
Yes.
September's a long out ways, but I think like even just like 30s or 40s in September is just such a long runway. See, what I want is I want the probabilities that I can capture shorter term, relatively shorter term in the next 6 months, upward price action that gives me a lot of that momentum that's closer, a lot of percentage moves if we get another gamma squeeze. But I also want some security and safety if that either doesn't happen or we just end up trading in the 30s and 40s range somewhere for a while. Although,
right.
I will say this, before I meant to say without you saying something, but I wanted to say one thing that I was just kind of glancing at here, which is that a lot of the highest options, if you look at March, the open interest March, and April open interest, and May open interest, the biggest strikes, almost consistently, aside from when there's like crazy high strikes, like the 145s in July, are $50 and $60 strikes. And the fact that there's such high open interest on those is really interesting to me. Because that right there, because those big 40s in June, those huge amount of 40s that were sold, is what basically triggered the gamma squeeze, which I think was sold by, was it Mudrick?
Did you see what triggered the push yesterday? I never even noticed this. It's the first
No,
time
I didn't.
I've looked at AMC's flow.
No, I didn't.
Just because I don't trade options on it, I don't look at the flow anymore. But yesterday, at 11:47, someone sold 1.8 million dollars in puts at the money.
Yeah, I think I did see that.
Not at the money, in the money.
Right.
Right. That's so bullish. That's such a bullish position to take, and it was from a floor. So the floor spent 1.6, just about 1.6 million dollars trading at the money puts, or in the money puts, expiring within 2 months. So that's like a very strong statement to a market maker. That's saying, hey, listen up, motherfucker. This stock price is going up.
Yes.
Just because it has no time. That's crazy. It's the first time I only really filter things for seeing the big ones, because like you don't really want to follow retail. They don't really do the right thing usually. You want to follow the ones who've left the realm of retail, right? Yeah, but
if you look at I'm looking at unusual whales right now. Let's see. Today, not crazy high bids. I think the most bullish action was $35 puts, which were probably bought a while ago, were sold. $277,000 worth of them were sold today.
Yeah.
But someone also bought $300,000 worth of $30 puts. But that's not as significant a statement as those $1.8 million of puts that were sold.
So yeah, and then if you look at like sorry, I don't have my stream seeing anything I'm doing, so this is probably super annoying for my chat, but whatever. If you look at the chart, you can see that if you look at the large buying, it's still largely heavy in the put skew. The put skew is still fat.
Yes.
It is. And that means to me that hey, the most lucrative trade will be taking a long stance and selling puts. So
yes.
when I view a stock and I'm trying to gauge, if you follow my trades, you probably realize I try to do the same thing that the market makers are doing, but it's the opposite trade. So if that makes sense. So if they're selling puts, I want to buy calls. And the way to recognize what type of market you're in is if it's let's look at AMC here. If you have a high implied volatility push, right? Like, so the stock goes from 13 to 70, then the calls and the options will all be trading at like a stupid high price. For instance, you could have sold a $100 call when we were trading at 72, which is, substantially more than 30% out of the money. You could have sold that for like 10% of the cost of your underlying, meaning the $7,000 or whatever, $70,000 to $7,000 to get your 100 shares there. You would be getting 10% of that each week to sell a call that's saying, hey, if you buy this call, you have to pay me $10,000. So you're collecting $700 to tell someone that you'll sell them shares that are trading for $700 for
right.
Yeah, right, for $7,000 for $10,000, right? It's a seller's market. So then you start to think, well, the institutional and the big money's not going to support the bulls anymore. They're going to start backing the bears. They're going to sell calls, which they did, and buy puts and short the stock. All of these things they did. And then you start to see us fall. And then this is the hope. The bulls had, their chance here for a bull flag to break out. But this is actually where I sold a lot of my shares, was this rejection, this triple top rejection at 60. I actually unloaded half of my position because this was before I was even on Twitter. And to me, it was just very fucking obvious that this is a lot of potential to go down. So if I was on Twitter, I would have told people I trimmed my position too, just because I'm not one to advocate holding things till they're red. But anyways, I did end up holding a lot of shares till they were red anyways. But here we are. So
here we are, yes.
So we're in the seller's market. It's high implied volatility. So now we're thinking, hey, the market makers in the big whales, they're going to be selling calls to collect that sure thing, to give me that fat inflated premium. They're going to sell those calls. And then at the same time, because they know that they're adding sell pressure, they're going to short the stock and buy puts. All three of these things are bearish, and they tell, and it adds a lot of strength to the bearish trading theses. So eventually, the bulls lost money, and we broke down, and then we broke down again, right? But this is where it gets oversold. So we start to get oversold down at the 30 to 29 mark back in August, and then the bulls have this nice push up, right? But we're still in the seller's market because the IV never dropped, and that's what I started bitching a little bit, because like the Vega sensitivity is too high. They're protecting option sellers so much so that it's become a broken game. It's stupid to be able to make that much money selling calls. But at the same time, right, if you bought calls down here, you made just as much buying them. So how do we find out how to get to the buying side where we want to be on the buying side? Well, you look at the stock and how it's behaving in the afternoons and what you're seeing in the large floor orders for the options chain. Well, in the afternoons, we finally bottomed out. Volume finally died out, meaning, hey, we lost a lot of fucking shareholders. It just happened. They're gone, but they'll come back, right? And we're starting to see this volume die with the implied volatility really not going that far down, but because there's no more downside, they can't collect the money on their shares. And the calls that they're selling might start to print. So now what did they just do in driving that stock price down from the 70 to the 15? And this is the same over any time fractal on any stock. This is just how Theta Gang works. What they did is they loaded the put skew. So when you look at the flow right now for something like AMC, there's just so many puts that are in the money. Why? Because the stock just dropped 500%. But that's where we get to the shift, and that's what John and I have been waiting for so long, is this pivotal shift where it becomes a buyer's market again. And it doesn't last that long because these runs happen so quick to get in on the trade for the buyer side of the market. It's a lot shorter of a span of time than it is for the correction to play out, right? Like who thought we'd be here 8 months later still trading sub $20? Yeah, exactly. Like I didn't. I sure as shit. Right. And that stems into, overall market corruption, like things like the OTC being able to allow high frequency traders to break down buy pressure, but like that's not in our control. So who cares? What is in our control is we can be fairly confident that we're going to see a nice push up soon as all of these bearish traders get stopped on their trades and we see FOMO kick in. We should see a fly right to the 20 to 30 range. And I want to catch that trade. And I'll take profits on it, absolutely, on my options. And I'll leave runners, that way I can catch, some of those John gains. Some of those John gains in 3 months when I forget about it, because honestly I'm not someone who likes to hold long-term positions, but this is just a trade setup that I see going beautifully.
Well, what I'm going to do is I'm going to take, because it was very lucrative last year, I'm going to, those $20 options, I'm going to get a few more of those in June, because those are just so, in my eyes, those are so absolutely safe. Like those, like if we're trading below $20 by June, then the whole economy has collapsed. That is my opinion on this. I think that it would be very, very unlikely for that to be the case. And I don't think that's going to happen. So putting that aside, I think that those are very safe. I have enough of them right now that probably by where it would be trading in June, the trade would be profitable for me. Oh, but I want to get a few more of those.
Yeah, let's be real. You could sell you said you got 6. You could sell 4 of them today and have 2 of them on the house.
Yeah, totally. I'm going to stick with them for just at the moment, because I want to see, like, if we do drop a little bit tomorrow, I'm okay with just, like, hanging loose with it, even though the money goes down a little bit, because, again, there's such time value on them, and there's such utility on them. I do have a stop loss just in case it gets below my, like, level that I'm not comfortable holding it for too long. But what I'm going to do, so basically my split is going to be here. Let me pull up see if I can pull up a screen here.
Oh man, I forgot to turn my. Oops.
So did you just start streaming as well too? Because I know you do have videos that you put up, but I don't know if you have been streaming a lot.
I was doing this. I was trying to do this live stream challenge, and it was A, too little money, and B, I don't trade the same if I'm being watched by people. It was the craziest thing. I was like stopping out of things for like 10% losses, and like that's just not my. You know what I mean? Like it was too much pressure. So I will be getting back into the live streaming because I do owe everyone that 500 to 25K challenge, and I'm very confident that I could do that. But
yeah,
with the time restraints right now, I think my priority is going to be the podcast, and then hosting free question and answering stuff for anyone who's in my Discord, and then the A through Z series on trading options. But yeah, I had never really got into the streaming just because I don't like staring at the same ticker all day, and it made me uncomfortable streaming online. Are you getting back into streaming?
I gotcha. Well, I hadn't really streamed before. The only thing I streamed was on like gaming with my wife occasionally. So like I had never streamed like just I had some YouTube videos. I haven't been on camera though for them. I was just like doing it for my laptop, and you can hear like the whirring of the MacBook fan in the background going because it's so loud. But I wanted to try and see like, do I like this, and is it something that people want to see? And by the way, if you do want to see more of this, please do like and subscribe. I know people say that all the time, but it really does give me insight into what people want. I know I can see how many viewers there are, but the more people there are doing that, the more people will see the stream, and the more I'm encouraged to do it. So if you do like this and you do get some utility from it, please do that. And do that for JP as well. Despite the fact that his stream is frozen, it will unfreeze like the deadly winters that we're in right now. It will come back. Except, of course, we're both in places where there's no winters. You're in Florida. I'm in California. I'm in Los Angeles. So there's no snow here.
Oh, and Axe, I don't know if I can let you in on that challenge, dude. You're already too good of a trader.
What was that?
Nothing. Someone from my chat was saying that they want in. I actually have been doing. My Discord got pretty popular, and rather than pushing the paid side, which I was doing for a while, and just hating everything, I decided I wasn't getting joy out of trading, and the only reason I trade is because I like it. So I just kind of opened everything up free, which was a little bit different, I guess, than what most people do, but it actually turned out pretty well, and we ended up with more paid members, which is very surprising to me, but I'm hiring traders from within my own Discord. And
that's good.
Exactly. And I picked one, Andex, first on my own, but I'm actually going to be letting the members themselves vote on it, and then those traders will jump on board on the payroll. But yeah,
seems good.
I think it's a good idea, but Andex is actually a little bit too good at trading, so I don't know that I want him in any challenge that I'm in.
Right.
So,
yes, I understand. So I wanted to. So I don't know if I think it's on my screen. I think I'm sharing it with you. So this is basically my game plan. 70-30 shares to options of the 30%, which the 30% will probably comprise about
300% of your gains.
Well, it'll comprise about maybe $15,000 to $20,000 invested into it. So I want to split that between the June 20s, 20% of that there, and the July 50s and September 40s is going to be 40% each of my budget, because I feel like what I'm seeing in the options chain right now is those $50 and $60 calls are really high. There's really high open interest on them. I mean, those July 145s seem unlikely, but the $50, $60 calls seem like an extremely probable scenario for a potential gamma squeeze if we get close to, because from like May to July, the highest open interest for the most part are $50 and $60 calls, especially those 50s. And those $40 calls in June of last year were the ones that really got us that squeeze going on, where we did 30 million shares returned in a day. So we're back at 100% utilization. The options chain is going to be juiced again. I feel like the June 20s are very safe. They could be very profitable just by themselves, but having those longer out calls that will go from out to in the money seems like, that's what made so much money last year when I got so many of those calls that were, when it was like trading at $11, $12, and I bought the calls like 20, 30, $40.
I was trading 1,000 contracts a day on AMC in
Wow.
like single swings, close dated, and the fucking stock froze.
Jeez, yeah.
I lost literally $400,000 in like 10 minutes.
I know. You told me.
It was just nuts. I was like, this is not fair. And then like I zoomed out a little bit and I was like, okay, I guess I made all of that in like 10 minutes too, but it felt like mine.
No, believe me, I totally understand.
One thing I wanted to say is there's a really cool indicator that I use, and it's free for anyone on Thinkorswim, and it's called the hot zone indicator. And what it does is it shows you a stock that's oversold on RSI while also being in a low implied volatility state compared to its historical and IV percentile. So what does that mean? It means it's the perfect call buying time. And if you look at my chart here, on the 4 hour, it's pretty fantastic for AMC. It's given us, since our run to 70, 1, 2, 3, 4, 5 different buys. And all of them were followed by at least a 20% increase in the stock. It's never given me so many clustered buys in a row as what I've been seeing since January 21st.
What's this called? Hot zone?
Yeah, it's a hot zone indicator, and the metrics on it are beautiful. If you trade options, you'll probably know why. Because for buying the perfect call, you want a stock that's consolidating, low implied volatility, in the oversold side of the market, right?
Right.
And that this indicator is also a scanner. So if I traded more tickers than SPY, once SPY's volatility dies down, I'll start trading other tickers heavily again. But while the volatility is this high, it's just stupid to spend the time to learn about other tickers.
Yes.
it just doesn't make sense to me. It's like, you're spending how much time doing DD? Just trade SPY, bro. Just gauge market sentiments. But anyways, this indicator, the hot zone indicator, absolutely love it. And it's not been wrong once on AMC for the 4 hour chart. And I've never seen so many. Don't get me wrong. It's not right consistently. Like it's saying, hey, if you buy here, you're going to be profitable. So if you bought at any of these points, something 2 to 3 weeks out, right? Within 3 days, you were making money. And then it's just up to you to keep that trade green. But anyways, I've never seen so many pop up in a row, and that was actually while we were trading higher than we're trading now. So it's still just as bullish.
I mean, for my market model that everybody keeps asking to see, but I can't share for legalistic reasons with a former partner of mine, but I can tell you what I'm seeing, bummer, but what I can tell you is that it has a bit of a shaky history at times with AMC in particular. I've had a lot of hits with a lot of other things, but with AMC it's been sort of like, but having said that, I am with you. I've not seen so many clusters of like uptrend waves in my model than in like in so very long, in literally since before we started trading up in May into June. Like there's just like a huge cluster of there's a large accumulation cluster that's been going on, and that I think is about to pay off or start to pay off, and it's going to pay off over the next few months. And where it's showing me right now, so there's like 2 big clusters of these like buying areas and oversold zones that's showing like buying pressure that's starting to build up and accumulate. One peaks out here. Show. One peaks out. The big cluster is 2 to 12 hours, so that's the 2 to 12 hour charts the uptrend waves are on that peak out between March 2nd and April 14th. Usually that means somewhere in the middle, although sometimes, like for example on Lucid, it just didn't do much from until it got to the peak zone, and then it just basically traced straight up into the peak zone the entire time. So it could do that. But it just looks like I feel like there's something around the end of March, maybe beginning of April, March 22nd, March 25th, somewhere in that area. I'm not putting an exact date, but somewhere in the middle of this, I feel, is where the biggest immediate gains are. What I'd like to see, because I have this large pennant drawn out here that goes back from March and has this and this top of the pennant over here, and where that we haven't broken up into it yet. We're getting ever closer to it. I think we would need to be around 21, I'd say, close over 21 to firmly break into it. But if we do, then we can break back into this. And if we get that, what I would love to see is a break into finally break out back into the top of the pennant and then get into like the 30s, 40s over here again. That maneuver there, that would be, even from here, would be, where are we at with that? That'd be a nice 100% move from where we are now, and I think it's totally possible. And I think like AMC is already undervalued as a stock from where it's at, and one of the things I'm encouraged by is there's so much, I've seen so many FUD articles recently talking about AMC. Just so many FUD articles saying like, get out of the stock, like apes are abandoning it. And however much that is true, the fact that I'm seeing a lot more of that recently, while we are baselining and holding this level, is kind of very interesting to me. Someone's buzzing in somebody's ear like, okay, we're switching long now. We need people to like be scared about this so we can accumulate for a bit, and then it's going to switch up again. So that's just my personal, slightly conspiratorial, but let's be honest, probably not all that inaccurate take on the situation. And so that's what I'm looking for. That's the area that I'm most interested in. So there's that zone here, and then there's another zone sort of out all the way between like June and all the way to October. Now, I'm not buying options all the way into January. That's way too far. Although I am intrigued by the fact that there's a secondary zone over here. So maybe I think, and there's the crossovers for those that cross us into buying pressure is at the middle of April. So there's like two zones. One, we already had the crossover for all of these uptrend waves down here from January 31st to now, which is the fact that it's looks like it baseline and found a bottom right in that crossover zone, which is where it should find its lowest point, is encouraging. Beautiful. And so this zone here is what I'm most interested in. The fact that it's doing what it should be doing over here, and that it hasn't fallen further, which it could, but it doesn't feel like that's what's happening right now. I could be wrong, of course, but it feels like we're finding this base and we're holding it. We did stab to the downside here, but that, to go with Wyckoff, that looked like just a test. That looked like a quick test of the downside that didn't last very long and then moved immediately back upwards. So I feel that this area, this March 2nd to April 14th zone, is the most probable for really vigorous moves. Are we going to get up to 40? I don't know. I would like to see us, the most bullish I could see this happening, if we just barcode here up until this zone, okay, that's fine. But I feel like if we get a little bit of a cool off and then another push up into this pennant again, then we have like a lot of room here into the spring.
The 20, right? So I'm seeing the 20.58 range as being like the 20.8 range as being like, hey, this is where we fell off a cliff. So obviously that's going to be like a pretty strong natural resistance.
Yes. But in fact, I'm gonna put that up on my chart right here.
Yeah, if we can break through that, I think you're absolutely right. We'll probably smash right through to the high 40s. But regardless, I think my takeaway is if I do trade this, I would be on the house by the time we hit mid 20s.
Yes,
and then
I'm with you on that.
If I have runners and they go 1,000%, awesome. But if I don't and somehow this bullshit continues and it sells off again, no big deal. We'll just re-enter later. But John, I actually did not catch how late this was running. It was super messy.
Yes, we've been going for a while. Thank you for subscribing, Bleed77. Thank you for subscribing. Sorry, go ahead.
For my first stream, so how about we do another and I'll plan a little better and get like my intro set up and we'll focus just on your trading style.
Why don't we plan for Friday, like an end of the week type of a thing? Perfect. I don't necessarily want to stream every day. I just want to I meant test run and just...
Right. I'm sorry. I meant I want to do like an official podcast and I want like an official episode with you and your trading style on it.
Yeah, sure.
And then from there, if you wanted to like do anything related to just like, maybe once a week streams or chats. Absolutely. I can't really commit to anything more than that. I can barely handle my workload.
No, I gotcha. Thank you, Manny Salazar, for subscribing. I appreciate it. Again, go subscribe to JP. I know his stream's been a little rocky. He's gonna get the bugs worked out, but I'm go subscribe to him too. His trading style is very different from mine. But you should be proficient in both if you want to be an options trader, I feel. And both of us have very different ways of doing it. And you'll find your own little zone where you can do both. So both of us are good people to subscribe. Yes, absolutely,
find your
100%.
niche and master it. But yeah, same thing to anyone in my chat. I did retweet John's YouTube link on my Twitter. So make sure you follow and subscribe him.
Yes, I'm going to... Thank you. It's not, I just find my best trading strategy is to find nascent assets that are undervalued, get in heavy and early, and make profit off of them. Track was another one, the cryptocurrency. And when I was getting in, I was telling people, and it was 20 cents. I was like, get in on Track, and it went to $6 within the span of like a month. And it was like a crazy good trade. But I'm that spidey sense, that thing is just like, I think lightning can strike twice with AMC, and I feel like we could definitely get there again. So I think like the key to that is these long out calls that have these months, bordering up there. And when we get into that $40, $50 range, and there's all this open interest on these calls, and we're getting closer and closer to them, there's some magic could happen again.
Gamma.
Some magic could happen again.
Yeah.
Gamma,
honestly,
baby. Yeah, another lovely gamma squeeze.
Honestly, if we have the institutional buy pressure here, right, to back this, then it could absolutely just gamma squeeze. And what people I don't think understand is just how many people are just like bag holding $140 calls. Don't get me wrong. I don't do this, and I would never recommend it, but there's people who just like buy, as far out of the money as they can, as many as they can, and they're diamond handing those.
They are,
and it's low chance, but if we do see this massive push up and we buy out this option chain, they'll have to add more strikes. There will be too much open interest, not enough shares, and then it'll probably run out to whatever the max strike is. They added, if you remember, to the $70 strike on AMC, and then once it halted in the morning, they added to the 140. We never broke past 70.
No, we didn't. We never did.
Nope.
We did get to it pre-market, but we didn't actually get to it during the day.
Yeah, I gotta run. I am late for a meeting.
Yeah, that's fine.
Trend Spider. I will.
That's fine. I appreciate you coming on. Did you want to try another stream on Friday if you're available for like a post-market stream? I don't know if you're available or not. If not, that's fine.
Yeah, absolutely. And let's try to see if
coordinate on the podcast.
Right, and if we can get it onto Twitter Space too, just because there's a lot of ears there as well.
Yeah, totally. All right, awesome. Well, thank you for joining, everybody. I'm glad that he was able to join. I will talk to you later, my friend.
All right, I will catch you later, brother.